Okay,
Yeah,
today's the 10th of September 2025, and we are just catching up and talking about the state of the markets. I think mid conversation we started talking about Manchester United, and here is Mr. Stocker Team. He's giving his bits. Carry on.
yeah. So, like I said,
Now you have to be politically correct.
yeah. So, the football business, when it comes to at the corporate level or as a stock as a business, many of them are not necessarily set up for investors to really make money from it. And I think in the UK and Europe, most of these businesses are not properly managed. They don't necessarily even grow this business beyond the vision of whoever buys the clubs. I think most of those clubs were even sold at record levels when at valuations that were not necessarily realistic. Many of them don't even do serious business within the communities that they serve or where they are from. So the likes of Man U was actually a big promise, like to the world, like okay, English Premiership, English football is going global. And Man U was supposed to be like a bellwether of, just like the what will I say now, the iPhone of club football. Man U was supposed to represent that promise, but it's one of the most disappointing business in sports industry for me, especially in football, because if you look at what other businesses in sports are doing outside of outside of Europe or outside of of the UK, in the US, sport businesses are doing very well. The NFL, some of the college clubs are doing record levels of revenue. They know how to market their business. They run those businesses better, and they don't just sell them to money bags who just use it to boost their ego. But it is what it is. We are not here to talk about Man U. We are just here to talk about some of these things that people don't necessarily want to talk about, in terms of you need to, for me, from my own perspective, because I am more of a fundamental person, you need to understand the business behind the business, the people behind the business. They are the most important set of people. So the stock ticker, the stock price will not tell you so much. We have example of Oracle that we're still going to talk about today. Look at the person behind Oracle. He has always been very, very consistent in what he's doing. You don't see him gambling so much around, throwing his business under the bus, doing so many things to hurt his shareholders. The likes of Man U did so badly, like they were just borrowing loans, buying players that are not necessarily going to. They were not necessarily building a brand from the football business that they actually do, even on the pitch. They were more or less, running after big money and buying players, and most of those players even lost most of the money. That's a matter for another day. So, but today I think we want to talk about the AI super cycle, the winners and losers. I think almost exactly like 2 years ago, we had a session where we talked about who are the guys who are going to win in the AI race, who are the ones that are going to be the losers. In fact, I even said there were going to be a lot of fraudulent companies that will just spam their website with a lot of AI buzzwords. I'm not a prophet really, but I just want us to open up the floor. I'll yield the floor to BrotherKeeper. I want to hear from yourself. From 2 years ago, when we had that session, when I said, yours truly, Palantir was going to be more or less one of the winners, if not the top winners of the AI age. I wasn't necessarily saying it just because I was exposed to the stock or I wanted to pump the stock. I was saying it because I knew that the technology they had was not just meant for the AI age. It's meant to actually go beyond the age of AI. So if you are going to actually make AI to be useful at the enterprise level, to actually be more malleable to civil liberties, more malleable to handling sensitive data, and actually handling so much data that AI depends on, you are going to need an operating system. It's just like the way we had Windows operating system that is still today perhaps the most successful operating system. We had iOS, till today is the most successful mobile operating system to today. The likes of Symbian, BlackBerry OS, Nokia OS, they died because there was not just a copy of iOS. There's not just a copy of Windows operating system, and that's why I also believe then that there was no substitute for the operating system that Palantir actually has. An operating system that allows you to build the copy of anything and replicate it, and you can run simulations, you can actually make decisions faster, build workflows, and even make one of the most interesting invention of our time, AI, make it more usable. For instance, everybody is building LLMs. There's Perplexity, ChatGPT, there's Claude, there's Mistral, there's just so many LLM. But at the end of the day, it's just like when you are mining for gold. Gold mining is just so rough, so dirty, so difficult sometimes, and so deadly and very dangerous that at the end of the day, to even get the gold of the cave and the mines and all that, it's not even the real work. The real work is refining the gold, making sure the gold is actually in a way that you can actually keep it, secure it. But at the end of the day, that's the way AI is actually going to be. We are going to have the chips, we are going to have the data center, we are now also going to have the operating system that makes AI useful. So if you are talking about the chips, NVIDIA is already a winner. If you are talking about the data center, we've seen what Oracle is doing. We've seen what Nebius is doing. We've seen what CoreWeave is doing. If you are talking about the operating system, Palantir is just the only operating system for the AI age, or even beyond the AI age, that a lot of enterprises, a lot of institutions are going to fork for their own fork anyway, for their own use. Because at the end of the day, you can't just depend on charts. You can't depend on the LLMs. On the business level, for instance, let's say you run a logistics company like DHL. DHL has maybe at least close to about 100 aircraft worldwide. DHL will have close to about maybe like almost 100,000 fleet of vehicles, trucks, minivans, so many cars that they use to deliver worldwide. They have delivery guys, maybe in their 100 to 150,000. They have warehouses. They have so many robots. They have so many data points that is generating a lot of data at the speed of light every second, 24 hours, 365 days in a year. Just imagine the quantum of data and how a company will be more efficient, because the current system of operating business is that you have the finance system, finance department, you have the procurement department, you have the technical department, you have the CIO, which is the technology department, you have the cybersecurity, you have so many departments. Many of these departments actually operate in silos, in the sense that the finance department just works on everything finance, and they do a report and present it to the board. The procurement department does everything about procurement, a whole lot of background checks and all that, audits and all that, just to make sure the company is not wasting so much money, paying for services or goods. You see the human resources department, they also manage the people, the talent, and also sustainability of the business. But everybody operates in silos, because at the end of the day, everybody's trying to compete with one another. The philosophy of the Palantir operating system is that you can actually connect everything together, and everyone across the enterprise, from the factory floor to the boardroom, everybody is feeding into a single system that makes the organization runs better. So at the end of the day, that's exactly what AI is going to do, making sure people actually, they are more productive. They are spending less time doing repetitive and non-challenging activities. So that's why I still think there will be a lot of losers. I still think people are still going to lose more money banking on a lot of companies that are not really ready. We've seen Salesforce. Salesforce is one of the worst performing stock on the S&P 500. I think the stock is down by about 30%. We've seen which other one? ServiceNow is still struggling. We've seen Monday.com. doing very, very poorly. Snow seems to be on a comeback, but I don't necessarily think that the data lake where you store the data is actually the real deal. The real deal is the at the software level. The real deal is the operating system that doesn't force you to use a software that is very, very complex to actually orchestrate. Is an operating system that allows you to build your own AI, make it useful for people within your enterprise, and not something that you just give a very big name and nobody's using it. You're just paying
Right.
so much frustration. So I'll drop on that note. And BrotherKeeper, you can come in.
We are moving the goalposts.
Yeah.
We decided to talk about the state of the markets.
Yeah.
Okay, so if you look at the state of the market, I want us to approach this thing by asking questions actually. And the first thing I wanted to ask is AI. So when we had .com in '99, .com only lasted less than a year. Actually, people tend to think everybody speak about .com and they think it lasted for years. It was only 1 year and it collapsed the markets. Yes, I believe AI is here to stay, but in terms of this disruption we're getting in this market, do you think this is the phase, or do you think it's going to be it's going to have a lasting effect? Don't mention Palantir. I don't want to hear
it. Okay, that's a very good question. I don't think it's a phase. I actually think the real revolution hasn't started. So, the real people or the real customers who are going to actually benefit more from AI are even public institutions. If you look at bureaucracy and how public institutions actually operate, they are very, very clunky. They don't even like change. They waste so much money doing so little, and the customers who are the general public don't even have any trust in public services. If you look at the NHS in the UK, if you look at even immigration in some countries, look at Canada. You apply for visa processes in Canada, and it takes months, if not years. It's so crazy that many of these institutions, especially on the public level, they are still operating using very, very old and archaic process. You'll be very, very shocked that if you go into some of these public institutions, they are still using spreadsheets, actual spreadsheets, to do scheduling of people who work shift or who actually provide services. A lot of their, systems are still very, very old systems that even the likes of Oracle and the rest, they've actually discarded those systems. So I believe the AI super cycle hasn't really started. Why do I think so? I believe we will more or less have a shorter number of weeks for people to be working. So, e.g., when government institutions start investing so much in AI, in terms of building their own AI, making sure all of their data goes into the cloud, many of them will not necessarily need a lot of people working 5 days a week, because even some government institutions like the police and some other services, they work like every day of the week. They work like shifts. I don't believe we're going to be having 5 days a week work day. I think we might be having 3 or even 2 for some people. So a lot of those investments that is going to make life easier for people who work in public services, people who provide essential services. AI investment is going to take so much more. So if you look at what a lot of government institutions are doing across the world, they are trying to actually adopt technology. So if we want to liken this to .com bubble, I think they are not necessarily the same thing. .com bubble was basically a lot of people believing that the internet is going to change everything, but there was no investment. There was no use case for most of what people were doing. Everybody just put .com at the end of their business name, and they took it to the stock market. There was no developers. There was no social media. There was no real value that people were generating. Look, for instance, look at what Fannie Mae said. I don't want to mention the name of the stock, but Fannie Mae said, after they moved to the operating system of the said AI company, what took them 2 months to find fraud or determine whether a mortgage application is fraudulent, is now taking them less than 60 seconds. That's actually what AI can do, and that's totally different from what the dot-com bubble actually, what happened. Yeah, so that's what I think. Yeah.
Okay, that's the okay. That's a good response. Now, I think the key answer I was expecting is to relate it to the market. So we talked about, yes, I believe AI is here to stay, but I'm saying, is it a phase in the market? We could see now. So let me tell you what I can see from the markets. I've got a few guys here in the group who are heavily trading, and for example, I think someone made about $70,000 yesterday trading earnings on betting on Oracle overnight. And so what I wanted to say is, with .com, when it started, it blew out, and a lot of companies faded eventually. Thankfully, we're all here. 5 years ago, everyone started saying, all you need to say is, we are investing in blockchain, and that's what you need to do. And then it became a blowout. Now we've got AI, okay? And now, from the state of the markets, somebody asked me today, oh, what do you think of Kroger? I said, I don't know, because I can't see orders coming in from level 2. That's number one. Number two, the similar thing happened with Target when they delivered the earnings. It was a great earnings, double beats, but it went down because it's not AI. Walmart, they did the same thing. Walmart did very well, but it's not AI. I know Walmart is getting into AI now. They mentioned the AI the last quarter, but this quarter they didn't exactly mention AI because, repeating the same old news. Tesla actually lost. It was a catastrophe. But guess what? They went on about AI. And what happened? The stock boomed. Because Musk just kept talking about, we're making the robot. It doesn't even talk about the cars anymore. Now I'm saying, so the companies not mentioning AI, they are collapsing. The ones mentioning AI are booming. But eventually, so the question is, do you think very soon the wool, everyone's eye is going to be clear eventually, and they'll be like, do you know what? We just realized there's so much fluff in some of this company mentioning AI, and it's time to go back to the real things. If you look at Berkshire, it's not doing very well because he invests in value. People don't care about value at the moment. It's all about AI. So I'm saying, so give me a 3 months is too short. 12 months to 5-year projection. Do you think the market is still going to be screaming AI, or the market would have moved on? So mainly talking about the market, targeting the market. That's your response.
Yeah, I think I think the market is going to decide the losers and the winners. I think what is going to likely happen is, in the next couple of 2 quarters, companies will be judged based on what they've invested in AI, especially the ones who said they were doing AI or AI is going to transform their business. They will be judged based on actual returns. So, for instance, how many companies who have spent so much on data center for AI, they've perhaps maybe created an AI unit, or they've invested in AI ventures, or they've even acquired companies that do pure AI, either from infrastructure or software level. They will be asked, as your margin gone down, are you having much more profit on your net income? Is it actually increasing? So a lot of companies who can show those workings, many of them will be published, punished harder. And we are already seeing it. Salesforce actually made so much more noise in the last 1 year on AI, and Salesforce seems not to actually be showing workings. Even Trade Desk. So I am even saying that the market is already actually pricing in the winners and the losers. The market is even already saying this is not going to make it. this might likely make it. So, for instance, Trade Desk, which perhaps maybe if you want me to talk about that later, I'm into advertising. I've always been into advertising for the past 15 years.
We're going to talk about Trade Desk. Don't get into that. Yeah, just give that generic response.
I'm just saying that the market is not going to wait for too long before you start seeing companies losing a whole lot of the frothiness in their valuation. The market is not going to wait for the next 2 years, 3 years down the line. The market will actually quarter on quarter punish companies who don't justify all the investment they put into AI. The likes of Microsoft is already showing it. You know, if you see the Azure side of their business, is now growing faster than anything. The likes of even finance companies who said they've actually invested so in their AI venture or AI research and development, many of them are actually going to be asked a lot of questions. So if you have invested into AI, for instance, for a bank, let's say a bank, for instance, how many more branches have you actually closed down? Because those kind of decisions will actually show that, okay, the bank is actually seeing more results in their AI initiative. So look at Citigroup, for instance. Citigroup is saying a whole lot of their elite wealth management business, after they adopted AI, they've actually cut a lot of process that takes them at least 1 or 2 months to onboard a new customer, you know, the high level, high net worth individuals who actually use their wealth management product. They've cut it from 2 months in onboarding them to about 24 hours. That's actually revolutionary. So, in the real sense, for that 2 month process, that they were actually doing all of that, you know, paperwork and so many back and forth, that means they actually need less than half of the people working on the back end or the back office. So companies will actually be asked the real question, because AI really is not necessarily going to replace everything. For instance, at that basic level of efficiency, have you been able to reduce your overheads, especially the cost of running your business, especially the number of people that you're actually deploying on your business in terms of overheads? So that's why I think it's not going to be so many months down the line. Many companies will be asked, they have questions, and they actually have to justify their net income, their actual margin, you know, showing for it. Yeah.
Okay. Right. So that's good. Now let's talk about TTD, Trade Desk. Trade Desk is a S&P. What do you think is happening? You said you think it might go down to as low as $20.
Yeah.
And if you look at Trade Desk at some point, 2nd of December, this stock was $141.
Yeah.
So the market is actually, it's cut this thing into, it's divided by 3 already, almost.
Yeah.
Okay. This company is down 67% from its all-time high over the last 9 months. So,
Yeah.
What do you see?
So, like I said, I've been into advertising for close to about, I think, 17 years. And as a matter of fact, in the market where I started my career, I was the first set of digital analysts. We used to call ourselves digital analysts. There was no social media influencer. There was no digital buyer. There was no digital media planner. There was no digital. We were just digital analysts because there was nothing to actually digitize in terms of it was. I think the highest we did for most companies was to even create their first website. So the first social media account for one of the biggest consumer or food company in the world. You know, I don't want to mention the name. I was the one that built the first social media account, starting with Facebook. In fact, the first campaign that they did was Yahoo. Now, why am I saying this? Is as at that time, the like of traders were not even in operation. So what happened was that as soon as more people built websites, more bloggers came on board, a lot of other platforms, websites, streaming platforms, everybody now has so much, what will I say, real estate, digital real estate to actually play with. A lot of those websites now has a lot of audience. So a lot of advertisers find it very, very chaotic to talk to so many websites, so many bloggers, so many digital, digital publishers at the same time. So the likes of Trade Desk, what they did was to actually form what we call demand side platform, in the sense that they have a relationship with supply side platform. So supply side platform are companies that aggregate all publishers and actually code them into a platform that the likes of Trade Desk can now make available to advertisers or agencies. So Trade Desk is a demand side platform. Trade Desk doesn't have the supply. They provide the demand. So the demand is the agencies, the advertisers, or the small business owners who just want to advertise. Now, that was going very, very well until the likes of Meta now felt, come on, we've been giving all our traffic to Trade Desk. What stops us from taking a few guys, smart guys from Trade Desk, a few guys from all the major advertising agencies? Let's form Meta Ads, and because we are the owner of our data, we own all the social media audience, and a billion, close to about 2 billion people on Facebook. So they started creating their own demand side platform, and because the data belongs to them and people were using their platform for free, they basically started talking to agencies directly. They were talking to advertisers directly. In the last 5 years, actually, before AI even became the buzzword, the likes of traders, they've been losing close to about 20, 15, 30% of their business. But because the demand side business was still very, very big, and a lot of these, tech giants like Amazon, like Meta, like Microsoft or the rest, they were not necessarily putting much more money. But when these businesses discover that, so we can actually generate maybe about another $10 billion from our ad business, they started poaching so many people from the advertising agency. So in the last 5 years, Amazon is now much more an advertising company than even an e-commerce platform. Amazon has alone, especially the amount of money Amazon generates from advertising on Amazon e-commerce sites, advertising on Amazon's other platforms, is a huge chunk of their revenue. Meta now deals directly with advertisers. They deal directly with agencies. So at the end of the day, the business of Trade Desk is not necessarily needed anymore, because I think what they should have done when all of this was happening was to sell that business to either a Google, a Meta, or Amazon. But at this point, I don't see the business actually being able to withstand the likes of Apple, the likes of Amazon, the likes of Meta. So for me, is this the end for Trade Desk? I won't necessarily say yes. I think it might be an acquisition business because the technology is still very good. So if the likes of Apple now wants to start running its own ad business, Apple can basically just buy the tech and make it Apple advertising. And Apple has how many devices? I think close to about 4 to 3 billion devices worldwide. That's going to be a very good deal for Trade Desk. But Trade Desk existing as a business that is going to 10x or even claim back all the losses, I don't see that happening. Thank you.
Okay, that's interesting. You have a lot more advertising knowledge than I do, so I'll take your words. But this other one we're looking at here, which is Apple. Apple launched iPhone 17 yesterday.
Yeah.
And since the launch, Apple has been down 5%. That's number one.
Yeah.
Number two, if you look at Apple again, sorry, I'm just looking at it here on the charts. Apple hasn't actually, Apple, I would say personally, I believe Apple's returned more than more to shareholders even than Steve Jobs, and because Steve Jobs actually he handpicked Apple. Then I remember he used to be anti-Apple. Now you are pro Apple. You're like what's the Bitcoin guy, Michael Saylor of Apple. So I'm not gonna ask you what you saw, because I think you're gonna say everything here in this conversation. But I've still got another question after this, by the way. But now that I think Apple has been stalling for a while. I wouldn't say for a while, to be fair. They hit all-time high in December, and they've not been able to beat that highs. I think the closest they got to it was February, and then they got near it in September, on the 5th of September. And they've been overtaking. I think Apple was the biggest company for a long while, and now it's the fourth, I think, largest company by market cap. So after Nvidia, Microsoft. So what do you think? And of course, wrap this up, including, do you think it's time for Tim Cook to go?
Okay, so I think why I actually double down on Apple, and when I mean double down, I'm not necessarily buying Apple. It's just that I'm not going to sell what I have, because I have a very good average price. Apple, as we speak, is number 4. It used to be number 3. It's been overtaken now by Robinhood, and also overtaken now by Uber. So just to put that out there, but I don't necessarily think selling Apple makes much sense, because here is a company that has over $150 billion in cash. The problem I see with Apple is that, yes, Tim Cook has to go, but I think that will actually happen as soon as he stabilizes the business. I don't see Apple having any existential problem per se, because if you actually ask yourself, like I always say, where is the alternative to Apple? Is it Samsung? Hell no, because the kind of distribution, the kind of there's one word, the franchise that Apple has, the network that Apple has, and that trust that Apple has. There is no tech company that actually has what Apple has. So I don't believe that Apple is in a very big problem that they are not going to actually be able to overcome. What I see happening is that the company is going to redefine itself. The company might necessarily go into more acquisition, but I think they want to see the regulatory environment to be a bit less hostile. So if you look at what's been going on in the last 3 years, most tech giants like Meta, Google, Microsoft, what they've been doing is to silently go and back a startup that is going to actually blow up. They will buy a stake in those companies, because if they go out to acquire the company, the deal is not going to be approved, and they are going to be called out for trying to buy or kill a company. So what I see Apple doing is that Apple is going to be doing more acquisition and partnerships. And as soon as AI gets to a point where AI is now more profitable, AI is now giving proper net income to a lot of businesses, Apple will continue to do more deals. Apple might actually do a few acquisitions here and there. So I don't see them facing the BlackBerry problem or the Nokia problem. BlackBerry and Nokia were totally different from Apple as we speak. So for instance, if you look at the devices that Apple has to offer in terms of durability, in terms of the brand image, which is even the most biggest asset, no other company has it up till now. You will see a lot of people saying, the Android phone has so many features and all that. Yes, that's why it's different from Apple. Apple doesn't necessarily have to have so many features, but the security, the trust, the franchise that Apple has, and that level of relationship that Apple has, none of them actually have it. So for me, I don't think pushing Tim Cook out, and I'll close on that note on Apple, I don't think pushing him out will be the solution. I think what we need to see is more or less maybe what actually happened when we lost Steve Jobs, more or less a transition phase, more or less what Berkshire is doing, where Greg Abel was announced almost 2 years before now, and the old man is just going to retire later this year. So I think maybe before the end of this year, we might have an idea of who is going to be taking over from Tim Cook. Not necessarily like Tim Cook just leaving in the next 6 months. It might even be 2 years down the line. But I think we might have an announcement or a phase, and that might actually be the next phase of Apple. I also believe Apple has something in store, not just the foldable device. I believe Apple has something nobody is actually thinking about. It might not be a wearable, it might not be a smartphone device. It could actually be something that is going to be what everybody, because like Tim Cook said, people don't actually know what they want until you show them. So I think that's why I think they have that magic wand. If you remember the airport, Apple brought the airport, and now everybody is doing airport. If you remember the smartwatch, a lot of people were doing smartwatch, but when Apple came with his own smartwatch, then everybody wanted to copy. So I believe Apple still has a revolutionary product, which is going to be more or less as an AI product, and they are going to launch that maybe in the next 2 to 3 years. But that's going to be the next phase for Apple. Thank you.
Okay, interesting. Now, this question is back to the state of the markets. Look, do you actually think we're in a fluff? Keep it simple.
Yes, I think we're in a fluff. A lot of monies were generated during out of the thin air during the COVID pandemic. So you see a lot of people who have never worked their entire life. They now have portfolios of 50K, 100K, some even 1 million. But I believe many of those people will lose those monies to gambling in the market, because when the reality comes, especially when the AI hype or the boom cycle faces a realistic judgment, or a reality check, many of these people will lose most of this money that they've gambled with. They think they have money and all that. So we are still in the fluff, but I don't necessarily think the market is going to crash and the world is coming to an end and everybody should sell their stock and all that. But at the end of the day, if you remember what happened during the Russian Ukraine war, a whole lot of stocks that had no fundamentals and all that, they lost close to 80%, 90%. Many of them have never recovered till today. Whereas the few ones that recover are the ones that we are looking at. So we are in a fluff. We are always in a fluff anyway. Yeah.
Okay. Now, going to next week, I think it's looking like we might get a rate cut, right?
Yeah.
Based on the data that's coming out. Probability. I think based on the probability, just give me a second. Let me just look at the Fed watch. And it looks like, the rate, well, we get the announcement in 6 days, and the rate cut is now 92%. Probability that we will get a rate cut is 92%. What do you think is going to happen, and what do you think should happen when the rate cut, if a rate cut happens? Number one, and number two, how much rate cut do you think we should get?
So I think from what I'm seeing, I think the market is already pricing in a 25 basis cut. I don't think we are going to get a 50 basis cut, because even when the PPI that came out today is showing that inflation for manufacturers is not as bad as we think. As a matter of fact, it's coming down. I think the Fed chairman learned his lessons from when he said, transitory, and it wasn't transitory, and he got it very, very wrong. And, inflation ran amok and all that. So with what is going on with the whole tariff, trade, or, negotiation that's not really wrapped up, China and the US are still playing, hide and seek. So there's not necessarily a definitive, answer. So he's still going to be waiting for more data. So I don't think we are going to get more than 25 basis cut. I also think after the first 25 basis cut, we might just get one more before the end of the year. But the market has already run very fast. At least in the last 2 days, our portfolio, Stocker Team ASP, has done well over 4%. And that's a lot for a portfolio that's already done close to about 60% So if we are expecting the market to run into the sky, and if we even have the market running into the sky after the first rate cut, then anyone buying anything at that time is playing Russian roulette. It's going to be very, very dangerous, because in the next 2-3 days after that, a whole lot of those stocks will actually pay their losses gains, and some of them will lose close to 15%, or because there's going to be one works that's going to be thrown into the works. You are going to get maybe one crazy professor that will say, "Oh, AI is a hype." If you remember what happened with the MIT report, if you guys even remember, just as an aside that is very, very relevant. If you remember, 6 years ago, there was a university report that said Facebook was going to die in the next 5 years, and yeah. So those are the kind of news that people were. I see a lot of fraud. And that's why I also want us to be careful with the whole story that, oh, AI is overhyped, AI is this, but people are making money in the sense. So you see a lot of people who missed the bull run, or who didn't buy the winners in the AI race. They are the ones shouting most. Oh, AI is hype, AI is this. But if you look at what other businesses are doing, there's amidst the hype, amidst the noise, there's still a lot of value. So yes, I see a sell the news kind of thing. But if we get lucky and we get 50 basis points, I think the market will actually run very fast. But am I going to be buying anything? Hell no. I'm not going to be buying anything, because if my portfolio has done, as I speak now, over 80% this year, what exactly am I doing buying anything when the market is still going to pull back and consolidate? So anyone buying anything after the rate cut announcement, maybe is a trader who thinks they are very smart, maybe not as smart as BrotherKeeper, but I won't be buying anything, and everybody should be very careful. Yeah, exactly.
Okay. Now the question is, if you are new in the market, what do you think they should do? Forget about learning, etc. Where should they put their money?
Okay, I think
you don't have to mention in any specific stock, by the way.
Yeah. I think anyone new in the market now.
Well, you can mention so if you want, but do not mention Balance here.
No, I won't. I won't. Because if they turn up their TV every 5 minutes, you are going to see something about the stock. So there's no need for me to actually, people are doing the Lord's work. But anyone that is new to the market, I think should be a bit more cautious when choosing stocks. I don't necessarily think rushing to choose stocks is the best approach. I think such persons should actually not run too fast to choose stocks. Look at the S&P 500. Look at NASDAQ 100. NASDAQ 100 is one of the best index I've ever seen, because despite when people say, oh, tech is always overvalued, but NASDAQ 100 only has the top best performing tech stocks. So going wrong buying NASDAQ 100, I don't think anyone will go wrong buying NASDAQ 100, because even if the market goes down by a fault, or a very big catastrophic problem, a war or anything, you see NASDAQ 100 going down, with an elevator. And when there is a closure, or there is a negotiation, or there is any glimmer of hope, NASDAQ 100 moves very fast to the upside, because that's where everybody wants to invest. So NASDAQ 100 is something to start with. Even this year, let me bring up my lovely dashboard. So NASDAQ 100 has done 13%. So even with all the noise that Trump and all that. Secondly, I think China is also not bad, but I wouldn't say you should invest directly in China. There is a very, very good ETF that is more or less like the version of the NASDAQ 100 for China, and which is KWEB. I regretted not buying KWEB 2 years ago, but look at this year alone. KWEB has done 38%. You heard me right, 38%. That is very, very huge for anyone trying to get into the market. So don't rush to buy individual stocks. Don't think you are very, very smart. So the problem I have with people who are just joining the market is you try to mentor them even without even collecting a dime, because I don't even collect a dime from people. on one-on-one. But you try to mentor them, and after 2 days, they start sharing stock tickers with you. Oh, what do you think about this? Oh, I think I want to. So you don't necessarily have to rush buying individual stocks. The exchange ETFs, index funds are very, very good. Also, look at the financial sector. A lot of banks are now moving very, very fast with innovation. They've learned their lessons that they can't continue to play a lot of very, very dangerous games with customers' money, even with their own money. So what most banks are doing is they are trying to be more efficient. They are trying to be more resilient, so that even if we have any economic shocks, any global problem, many of them will still be able to operate. Many of them might not need to actually be bailed out. So a lot of banks in the last 3-4 years, they are now giving record results. I'm not going to mention names, but if you check the ETFs that actually track the financial sector, especially UK, US financial sector, many of those ETFs have done 30, 40%, 50% in the last 1 year, in the last 2 years. So you should actually be, investing in finance. Another area that you can't shy away from investing in is the AI sector. So AI sector, you might not do well buying the ETF, because ETFs that actually track AI, many of them, there's a lot of shenanigans, complexities, and they are not as matured as the S&P 500. So I will still say that should actually be your next goal after you've been able to build the building blocks. Buying the likes of Nasdaq 100, the KWEB, the financial services sector ETFs or index fund. You should be choosing 2 or 3 players. Don't just go for one. At least go for at least one in the data center business, one in the chips business, one in the AI operating system, and maybe one in the AI infrastructure support sector, like the energy sector. So that's what I think. Thank you.
So let me close by asking you one more question. So for the rest of the year, but you don't have to say specific, or you don't have to be specific. Where would you put your money if the market keeps going this way, or what's your plan for the rest of the year?
For the rest of the year, I am buying more into the financial sector because I need to actually rebalance my portfolio. My portfolio, or our portfolio, because when I say my portfolio, it's not just mine alone, it's my business, my family, because I manage everything together. So what I'm doing with our portfolio is to make it not just moving away from tech or AI related teams, is to be a bit more robust, so that we have more representation in the broader market. So financial sector is what I'm looking heavily into. I'm also thinking of utilities, and I'm also thinking of the energy sector. So those 3 areas are where I'm actually deploying capital. I'm not buying anything in actual AI or pure tech play or pure software play. I'm more focused on the financial sector. I'm more focused on energy and utilities, because I believe to rebalance the portfolio and make it less, not necessarily volatile, but more representative of the market, finance, utilities, and energy is an area where I think I'm deficient. So that's the only area I'll be playing.
Fantastic. Okay. I think that's a really good one. We're looking at the state of the markets, and I kind of turn into a question and answer with yourself.
Yeah,
Do you want to wrap it up?
Yeah, but I still want to hear from you, because you've asked me a lot of questions, and you are a trader, but you said you've been investing. So
Yes.
in the last 8 months of the year, what have you been investing in?
So yes, you're surely right. I have been purely trading, but I think a few months ago I started investing, and one thing I hate to do is picking individual stocks. I think I do pick stocks. Don't get me wrong, but I don't pick as many stocks at all as possible. I think I have a handful of stocks. I tell guys I work with, well, that we trade or invest together. I say, look, one rule I have is if you have to scroll, you already have too many stocks anyway, or too many positions. So personally, because I think no matter what, if you, even if you, but that's just a personal opinion. If you're a trader, you still need to invest. Full stop. So I have a few positions, not many. I think maybe about 3 or 4. One thing I've been screaming to the guys in our group is the minute Trump came in, I just said, guys, buy oil. Full stop. When we looked at a few oil companies and we shot, we didn't exactly filter to the few. We just but there's a few that we mentioned anyway, and I said, okay, these ones I feel are good. Of course, after doing our due diligence. That's one. Number two, for me personally, I think S&Ps run a lot, but I just think it's another place to park your money. But that's just me, on a personal opinion. Guys, everything we say, nothing's financial advice, just in case. Yes, so I do S&P as well, and but majorly it's been mostly trading. Like I said, I spend my money on a property, on a house. So I kind of started building from scratch. But I do what I call it's up to people, but I do a 70-30 split. I do more 70% in, well, when I get my cash, 70% goes into investing, 30% goes into trading. But at some point when I needed to build my cash aggressively, I was trading. But one thing I keep saying is I treat my investing account as a trading, and I treat my trading account as an investment. What does that mean? So when I want to get into any position, whether it's for trading or not, I look into a lot of things. You got to look into dilution risk. You got to look into the corporates. You got to look if the of course the margin of safety is very important. You got to look into, yes, earnings performance, or you got to look at the multiple expansion that they've got all the while. Those are a few things that I look into. Then of course I've got to look behind the hood that many people do not see. I've got to see, are actual orders coming in or not. If I see actual orders, then of course these are the things I remember. I bought into UNH before it collapsed. I called it in the group, but it was a trade. Someone mentioned the risk, which is the fact that it was it's been suspected of fraud, etc. And I said yes, of course. And when the trader did, and he jumped up, and and I left. I think I left at 600 or so. I remember going from 480 to 600. It was a trade purely. We left, and when we left, it collapsed. And I thought, wow, look at that. So, market goes both ways. I still short. If I think something is fluffy, I short. Sometimes market goes down. People ask me, oh, why is the market down? It's a personal opinion, guys. I'm not the market. Market doesn't need a reason to go down, full stop. So, if it goes down, I'm expecting it. I think my risk, my watch word is risk management, full stop, and that's it. Okay, I'm seeing some questions again. Someone asking about gold. Someone asked me again that we're trading together. Gold was at 3,300 or whatever it was then. He said, what's your opinion on gold? Do you think it's time to short? I said, no. I think gold's going to go to 3,500. And I remember calling you yesterday, said, look, gold is now at 3,600, full stop. So, there's a big risk. And I keep saying, be afraid, very afraid. I know you didn't. I'm just rambling on now. Someone asked about silver. There's something people don't understand about gold-silver ratio. Again, somebody wanted to short silver at 39 or 38. No, I remember, and I said, look, silver is going to do a lot of numbers. In fact, people were calling 48. Again, this is behind the hood. If you cannot spend more money, you cannot get into trading. Trading is not just, it's beyond the chart. I remember someone was short silver at 38, and now silver is at 41, and this thing's still going to do banana. It's still going to go a lot more. In fact, some people are betting at 50 now. And this is, so there are real huge opportunities in gold and silver, full stop. So I still think it's going to go a lot. We trade aggressively. Some of these things, Palladium did so well today. That's something we do. But you know me, I'm into my cocoa. Cocoa has been something I've never left cocoa since I started trading it. No matter what happens, I'm always in cocoa, up or down, So I've got cocoa. Some of us are trading coffee, commodities. So when the market's the fluff, I park my money, I move my money into commodities. Oil is another one. I've got to say this, while this David guy, David is betting down, I've actually been betting up instead. So, and as you can see, so I don't know if you're losing in oil, sorry, you're giving me your money. I still have a target for oil. Yes, there's a weakness in the market, but again, the market is not the economy. I trade what I see, and oil right now, oil is going up full stop. So that's all I can say. So oil is you're betting for 50. Why not? It's a probability trade. Anything can happen. I'm in profit with my oil. One thing I'm constantly betting against is the dollar. But the dollar keeps pushing up because you can't bet against the economy. You can't bet against the Trump, the government, the Fed. If they're gonna print more money, then of course my position is gonna keep weakening. But again, that's just a hedge for me, and full stop. I think people tend to mistake about hedges, but there's a few things I'm going to have to keep to myself. But these are my learnings, and that's it. So yeah.
Yeah. So thank you. I think we should take questions before we close. What I've been doing with if people who join my mentoring community is to really support people to build portfolios. The challenge most people have is they pick a few stocks here and there, but they don't have that strategy behind it. So depending on your age, your financial goal, why exactly are you investing? How many years do you see yourself investing for? Are you doing this for a lifetime, or you just want to do this for a few years and you want to go and do something else with your life, or you want to become a full-time investor? That's what I want to become. I don't want to do any other thing than investing and running businesses or supporting people who run businesses with ideas. So that's what I've also been doing, coaching people on how to really, really be disciplined. The strategy I deploy is a bit more different from what BrotherKeeper would do. It is more of, high frequency, where the opportunities are. It goes there, it makes its money, and it moves on. I am more of, okay, I do more research to this business. I believe this business is going to maybe 10x, 5x in the next 4 or 5 years, and I'm building a strategy around it. So it's always good to have an idea of where you're going, because once you know where you're going, you actually know what you should be doing every day. So whoever is listening, this community has been one of the best things that's happened to me. Because I mean the Wealthackers community, not even the one I'm building now, because I think I joined this community more than 10 years ago now. So if you look at between that time and now, a lot of things has happened. We had a pandemic, we had a war that is still going on in Europe, Gaza, so many things is going on, nationalism, a lot of a lot of people who shouldn't even be in leadership are now in leadership across the world. So many things are happening. AI is now what everybody's talking about. So if you really want to be an investor, what you just need to do is to ask yourself, why are you investing? What do you hope to achieve? If you understand and you're able to answer those questions, I think becoming a successful investor will be much more easier. And at the end of the day, if you're an investor and you really want to be an investor, it's a lifestyle. It's not something that you can just hop on and think you are going to find it easy. You are going to actually have days of pain, days where your portfolio is down 5%, and it seems like the world is coming to an end. But after 2 days, something that is down 5% can be up by another 10%. So, but if you look at your success on a year-on-year basis in the next 2 to 3 years, you discover that being an investor will be one of the best decisions you have ever made. You now have a better perspective of how life actually works, how people make decisions just because they are angry, or they are anxious, or they are afraid, or they are happy. But at the end of the day, not doing anything sometimes is one of the best or the biggest weapon that you have as an investor. So that's basically how I think. and that's what I do. Exactly. So if we have a few questions, then we'll close it for now.
I think also somebody asked about gold. If you're not in gold, is it time to put money? Honestly, gold has been for me this year. I think I didn't invest in gold to be quite. It's quite interesting because I lost on gold last year. Gold I lost on I had two losses on two positions last year, and gold was one of them. I closed my shorts, and to actually think I caught at the start of the move last year. I think it was about 2,300 or so. And I waited and waited and waited, and it just started running. And since then, it hasn't exactly doubled, but it's almost doubled, if you can say. So I caught the start of the move about 2,000. So is it time to invest in gold now? I wouldn't say so personally. I think if I get an aggressive pullback, I will definitely put a lot of money in gold. And I remember earlier this year, someone came to my DM saying, "Look, I think the market is going to do a lot of stupid numbers, as in downwards." And she's in America. Asked me, "Oh, where should I put my money?" And I remember saying, "Don't legally buy the gold, buy the miners." And as well, did a few due diligence, and I mentioned a few gold and silver miners. To think I did not actually put money there myself. This a lot of these companies have done stupid numbers again onto the upside, of course. So and go, for gold to even be, outperforming Bitcoin, I think that says a lot. And that sometimes I know my messages might tend to be cryptic because I'm not going to tell people what to do with their money. I would just put it out there, and it's up to you to go think about what you want to do with it. So when I said silver is telling us something, Bitcoin is telling us something, gold is telling us something, we don't necessarily need to learn or memorize this economic terms, flagnation, inflation, etc. We don't necessarily need to learn or memorize these things. But what we need to understand is, look, they now come September, they're going to print more money again. And what does that do to your dollar? Your dollar worth less, a lot less. And Bitcoin is telling you, look, the less your dollar is worth, the more I'm going to keep going. Because Bitcoin is literally just a strings of code. I'm sorry to the Bitcoiners. Yes, I understand it. It serves as, but Bitcoin cannot have inflation if the amount is fixed. But we're going to keep printing, amounts of paper. We're going to put a value on it. It turns to value, and all the sweat all your sweat, we're just going to pay you this paper that something's been written on. And that's the purpose Bitcoin serves to defeat. It doesn't matter whether I'm pro or anti-Bitcoin. It doesn't really make a hilt in the world at all. But gold is telling us, Bitcoin is telling us, and the market is weakening. We had one of the worst market since 2001 in terms of jobs being created. But guess what? Everything keeps pumping. What does that tell you? So if you keep buying the hype, I think, which is why the song from Kenny Rogers does make a lot of sense. You got to know when to roll, when to walk away, when to hold, when to fold. Yes, things get a lot more desperate, a lot more dangerous. At some point, this will crash. But now, do you think you want to start buying gold? I really do not know if it's time to buy gold. Personally, I wouldn't buy it because if you look at the history of gold didn't go anywhere for 4 years, and all of a sudden it had a parabolic move, and this is the same move if you look at gold from 2017 all the way to 2020. In 3 years, gold literally, I think gold did about 40%, but and then it didn't do anything for 5 years, and in 1 year it's just doubled. So you don't want to be buying. Well, personally, I wouldn't be buying gold. I think I'd rather be holding cash, or be doing a lot safer investment. If you do not have the skills to trade, then I'll be doing a lot safer investment. Or there's quite a few undervalued ETFs right there, which I mentioned, in the group a few times. I'm not going to say anything again now, for the record. But those are the areas I think I personally will just be parking my money. But like I said, if you're investing, again, for me, I think the market's fluffy, but fluffy can go fluffier, full stop. The market is weak can get weaker, but it goes both ways. So what would I do when I think the market's fluffy? Less of my money goes into investment, and a lot more. Yes, of course, you want to invest. The lot more go into what I think is a lot safer, and that's it. In fact, if you're compelled to invest, you think you're not disciplined enough. Again, for me, I will be looking for the companies with the most cash. And that's where I'm going to be putting my money. People used to park money in Apple. That's one thing away, which I'm going to give for free right there. Apple used to be the place people just park money there. But otherwise, if you've got positions, you don't want to look at them for 20, 30 years. Hey, just buy the long time then and just don't look at them, and that's fine. But some people will get hurt. If you're looking at BSOs, bright shiny objects, I'm sorry, it will be you carrying that back at some point. Half the people who made money in 2020, they all give the money back, and that's the same thing that still will happen. But then we should close it anyway. If you have any question, people should ask, and we should close in a minute or so.
Yeah, do we have any question? If we don't have any question, we'll close it. It's a nice day, one of the best days for our portfolio. If you are not making money now, and maybe your portfolio is still down by, I don't know, but please always manage your portfolio. I don't actively manage my portfolio, but I exit and I double down on positions. So if you're not making money from your portfolio, you need to actually rebalance your portfolio at least every 6 months, so that you don't carry a lot of dead weight, and at the end of the day it becomes very, very difficult to claim back your money or get your capital out of your investment. So thank you so much, BK. It's been a wonderful experience. I know it seems like a dialogue, but maybe the next time what we are going to do is to have maybe the dialogue for about maybe 20 minutes. Then we can always open the floor, or we can even have editions where it's just an open mic, and any question that is very relevant to the financial markets, we can entertain it, and anyone that can answer questions. So thank you so much. I think we should be doing this maybe once in a month, because the way we've been doing this now is like once in 2 years, once in 6 months, or once in 8 months. I think once in a month will be very good, because this is a very good community that has really added value to everyone. A lot of people
you're right.
in this community, they don't even say what. Yes. Once in a month will not be bad. A lot of people out of this community, they don't say a word, but they read everything. And I get many of these people talking to me one-on-one, my DM, calling me that, oh wow, there's a lot going on in that community. They don't even think they need to say anything. They just come there and read everything, and they learn so much, and it has changed their lives. So thank you so much for joining. I think this recording should be available immediately, so that we can actually share this on different platforms. I
should put it on the podcast.
Yeah. I think I'll do that as well, with your permission as well. So
no, of course. Yeah. It's a group thing. Why not?
Yeah.
So, all right, guys.
Thank you so
Have
much.
a good evening.
Yeah.
Take care.
Take care, everyone. Bye.